This is Commodity Wrap. I'm Tony St. James. On a Wednesday, how did we finish off the session? Finished with corn in the red. We were lower for soybeans, except there the new crop November did manage to move higher. Meal was higher, while soy oil in the red. All three wheat exchanges at Chicago, Kansas City, Minneapolis, all lower. Cotton market lower as well. And since we're throwing all that in, how about the cattle market? Live and feeder cattle in the red and hogs in the red. So a lot of red on Wednesday. What happened? Brian Hoops is president, Midwest Market Solutions. All right, it's not necessarily the way we started the day, but, man, there was kind of a sour tone at the end of the session. What happened?
Yeah, you're right. We started off the morning hours in reaction to the news that President Trump had sent some officials, most namely Secretary Bensett and Greer, to meet with Chinese officials to talk about possibly reaching some sort of agreement or easing the tensions between the two countries. I think that's what we rallied on. Crude oil had rallied overnight. Stock market rallied off of this news. All the news is kind of positive, but I think it became a realization to a lot of the market once, especially when the early morning hours turned here this morning to our U.S. trading, that we weren't going to reach an agreement anytime soon. We may make some discussions, but as President Trump said around the midday time frame, he's not backing off his 145% tariffs. That may be just posturing from the president, but he is not willing to back them off at this point in time to reach an agreement. So we did see prices work lower into the close, fading from the highs of the session. Soybeans about 27 cents or so off of the night session highs. Corn 14 off the highs. Doesn't make these charts look very promising at all. So a lot of the funds who maybe are going to follow the charts more than the news are not going to want to stick around and be long because the charts look so bearish.
Just kind of looking here at kind of the trend. Our trend for corn over the last three sessions has been lower. I guess it's been the same for soybeans. Wheat with a bounce on Tuesday moving higher, but even the cotton market lower a couple of sessions here. So, again, it's the headline that's really driving this. But what about exports? I mean, we get a weekly export sales report, which will come out in the morning. You and I will talk about it on Market Day Report on RFD TV. However, we just haven't had any flash sales leading up to this.
No, we haven't had any since last week. We had a couple sales of corn last week, one soybean sale, a couple corn. And if you remember, by the end of the week, we had kind of faded some of those export numbers. And even Monday, we saw a very strong export inspections number for corn, 63.3 million bushels, but we didn't have a very good reaction to it. So we've had some export business or some positive export news, and the market has failed to react to it. And even looking ahead to the next supply and demand report, which is Monday, because of these strong exports and because ethanol demand has been strong, it looks like we should cut into ending stocks for old crop corn, but yet old crop corn futures are trading lower this week. They traded lower last week, trading lower again this week, and losing a lot of ground to the new crop December contract. At one time, just 2 weeks ago, it was 36-cent premium or so, and now that premium's down to about 9 cents is all. And, that's not a sign of a healthy bull market.
We get some numbers from EIA, crude inventories falling over 2 million barrels. Stocks at the Cushing location in Oklahoma dropping, 740,000 barrels. Gasoline stocks increasing, distillate declining, ethanol production down. Stocks now at their lowest levels since, back in mid-January. Could that be positive news, kind of building on what you're talking about?
Yeah, exactly. Our exports are running well ahead of last year's pace, and we factored some of that in, but I really look for the USDA to cut cut ending stocks by increasing exports in Monday's report. A year ago, USDA said we would have about a 2.1 billion bushel corn carryout, and we're going to cut this carryout down to 1.4 and some odd bushels. So it's a big miss by the USDA as far as what they were forecasting. Stocks are much tighter this year than what they were forecast to be a year ago. We'll have new ending stocks in this report on Monday as well. But the ethanol numbers that you talked about this morning, this is the highest production rate for the first week of May in the last 6 years. So even though we were down from last week, it's still a very strong ethanol production numbers that we're running on, and stocks did dip just a little bit, but we're still 4.1% above last year's as far as stocks go, and it's the second highest stocks on record for early May, trailing only the COVID year of May of 2020. So we have enough stocks, but we are seeing a lot of production. We're utilizing a lot of this ethanol right now, and that should lead the USDA to tighten balance sheets as well. So, one of the main questions we get right behind when is the cattle market going to top out is, why is July corn so weak? Why is this old crop declining when we have what we think appears to be strong underlying fundamental support?
Well, you teased it, so let's take a break, and when we come back, I'll ask the question about that cattle market. This is Commodity Wrap. This is Commodity Wrap. Our guest today is Brian Hoops. Brian is president, Midwest Market Solutions. All right, in the first segment, you kind of teed it up at the end. One of the most asked questions, and what is that?
When is this cattle market going to top out? Everybody wants to know. We had seemingly a large drop in values back in March into early part of April, and at the time, everybody wanted to know when this market was going to rebound. Well, it certainly has, and now the question is, when's it going to top out? Well, we've been going strong since about the 9th of April, so almost a month now of a pretty budding bull market. June cattle from that time frame have went from about $1.92 up into the $2.13, almost $2.14 range. So it's been a really strong market. A correction could be just several dollars in here. We could see a $4 or $5 correction. Maybe this June contract corrects down to $207.50, and that would just be seen as a simple correction in this market. So you're going to see a market, I think, that wants to pull back at some point. We've seen these pullbacks, from the January highs into late February, early March, and then another pullback. And I think that there's probably one coming in here, and it's probably going to be bigger than $5. It could be, $10 correction. When you move $22 or $23 higher, you would suspect we'll get half of that in the form of a correction before there's another run back to the upside. But that's the question: is when and where does this does this correction or price level start to peak out? The consumer really hasn't shown any signs that they're backing away from beef at the stores or beef at the restaurant levels, but that's always the wild card, is what price level will the consumer start to back away, and that's probably when the cattle market will top.
All right, I'll admit it. Last weekend, I hit a restaurant I'd never been to before, and my wife decided she wanted the shrimp plate. I decided on the steak, and it came out. I thought it was interesting because they didn't ask me how I wanted the steak prepared, so that should have been the first warning. And as it came out, it was very thinly sliced and probably at most 3 ounces. So, and they also said, we hope you enjoy your snacks. But it was priced as if it were more of a center plate item. I thought that was really interesting that we're seeing maybe some restaurants, and maybe this isn't a good example, but being kind of creative about how they keep featuring beef without increasing the price much more. I want to throw it over to the hog market for a moment as well. Bellies have been up almost $6 week over week. We don't trade pork bellies anymore, but we do kind of work it into the lean hogs, and it was a lower close. Is that more to do with just the stress from losing exports?
Yeah, I have to believe that is the case. From a fundamental standpoint, a little bit softer cash markets. The exports have been slowly working their way lower and weakening. We gapped lower on Tuesday morning, and that technical signal is a pretty good signal to the traders to either short the market or if we gap higher to buy the market until something changes. And so the fact that we gapped lower, I thought we maybe would be down even further than we are in this hog market currently. There may be, I think, more room to the downside here in the hogs because of the loss of China as an export customer. And unless we reach some agreement soon, I think we'll see that play out in the next several months as exports continue to slow down for the pork market.
All right. Before I let you go, lower close for the precious metals, gold and silver, taking a kind of the back seat here. West Texas Intermediate lower, RBOB lower, nat gas moving back higher. Final thoughts on any of those?
Yeah, gold and silver have had a tremendous run as well, especially gold. $200 move in 2 days. You would think they'll have some sort of correction or profit taking or something happen in that market to have us pull back here just a little bit before we resume that market trying to move higher. Not surprising that the crude oil would be down like it is. We rallied into resistance just around that $60 mark overnight on the China news and giving a lot of those gains back. $2 off of our highs will not make the charts look very good for crude oil. Of course, we're pumping a lot of crude out of the ground here in the United States, but so is Russia. OPEC nations are increasing their production. I think it's a real stiff climb for crude oil prices to try and move higher this year.
All right. We want to visit with you more. Brian, where do we find you?
You can find all of our offices listed at our website, maybe one that's close to you in your area, at MidwestMarketSolutions.com. And you can also call me directly, 417-501-5132.
Brian Hoops, President, Midwest Market Solutions on Commodity Wrap.